How to build a $1 million portfolio before 2030, a step-by-step plan. Building a $1 million portfolio is a powerful financial goal, and it's more achievable than many people think, if approached with a clear, disciplined plan. By 2030, you have just a few years to take the necessary steps to grow your wealth. Whether you're starting from scratch or already have some investments, the journey requires consistent effort, strategic thinking, and a long-term mindset. This video outlines the key steps you need to take to build a $1 million portfolio before 2030. Step 1. Assess your starting point and financial goals. The first step in building a $1 million portfolio is understanding where you stand financially. This means evaluating your current net worth, income, and expenses. Knowing your financial landscape allows you to map out how much you need to save and invest to reach your goal. If you're starting with $0, you'll need to rely on savings and investments to build your portfolio. If you already have savings or investments, that will work in your favor and reduce the amount of time required to reach $1 million. Here's a basic strategy to calculate how much you need to invest monthly. Goal amount: $1 million. Time frame: 5 years, from 2025 to 2030. Average return on investment, ROI, 8 to 10% annually. Using a simple investment calculator, you'll find that with regular contributions of $10,000, $12,000 per month, and an average return of 8% per year, it's possible to reach the $1 million mark by 2030. Step 2. Commit to a high savings rate. The foundation of wealth building lies in how much you save and invest, not just how much you earn. To build a $1 million portfolio, you'll need to develop a high savings rate. The higher the amount you can consistently save, the faster you can reach your goal. Aiming for a savings rate of at least 30%, 50% of your income is a good starting point. This may seem daunting, but it's possible with the right mindset and adjustments. Look for areas where you can cut back on discretionary spending. Create a budget that prioritizes savings and investments, and automate the process wherever possible. For example, if you can save $3,000 per month and invest it with an 8% return, you'll have around $225,000 in 5 years. From there, growing your capital with compounded returns and additional contributions can rapidly accelerate your progress. Step 3. Focus on income growth. While saving aggressively is important, you also need to focus on increasing your income. Higher earnings mean more capital to invest. Here are several ways to boost your income. Salary negotiation. Regularly assess your salary relative to your industry and role. Aim to negotiate raises or seek job opportunities that offer higher compensation. Side hustles. Take on freelance work, start a small business, or explore online income opportunities like affiliate marketing, content creation, or e-commerce. The goal is to create additional streams of income. Invest in yourself. Increasing your skills can directly lead to higher paying roles or entrepreneurial ventures. For example, learning high-demand skills like software development, digital marketing, or graphic design can dramatically raise your earning potential. Increased income allows you to contribute more to your investment accounts, accelerating your path to $1 million. Step 4. Develop a diversified investment strategy. Investing is the key to growing your wealth over time, but a smart strategy is essential. A diversified portfolio allows you to manage risk while positioning yourself for significant returns. Here's a step-by-step breakdown of the most effective ways to invest. 1. Stocks, index funds, and ETFs. Index funds and ETFs that track the overall stock market or specific sectors are one of the most reliable ways to build wealth. Historically, the S&P 500 has averaged annual returns of around 8%, 10%. By investing in low-cost index funds or ETFs, such as VOO or SPY, you can participate in broad market growth without having to pick individual stocks. 2. Individual stocks. While index funds provide stability, individual stocks have the potential for outsized returns. You can allocate a smaller portion of your portfolio, say 10 to 15%, to stocks you believe have strong growth potential. Technology, Healthcare and green energy stocks are some sectors that may see significant growth in the coming years. 3. Real estate. Real estate is an excellent way to build long-term wealth. Rental properties offer consistent cash flow and the potential for significant appreciation over time. If buying property isn't an option, consider real estate investment trusts, REITs, which offer exposure to real estate markets without needing to own physical property. 4. Alternative investments, crypto, and precious metals. If you're comfortable with higher risk, you might allocate a small portion of your portfolio, 5 to 10%, to alternative investments such as cryptocurrencies, Bitcoin, Ethereum, or precious metals, gold and silver. While volatile, these assets can offer high returns and serve as a hedge against inflation. Step 5. Automate your investments. One of the most effective ways to build a $1 million portfolio is to automate your investments. Automation eliminates human error and emotional decision-making, ensuring that you consistently invest the same amount each month regardless of market conditions. By setting up automatic transfers from your checking account to your investment accounts, you can ensure that your savings are consistently put to work. A great strategy here is dollar cost averaging, DCA. With DCA, you invest a fixed amount regularly, no matter if the market is up or down. Over time, this smooths out the highs and lows, reducing the risk of investing a lump sum at the wrong time. Step 6. Reinvest your earnings. Compound interest is often referred to as the eighth wonder of the world. Reinvesting your returns, whether that's dividends, interest, or capital gains, can significantly increase the value of your portfolio over time. If you're earning dividends from stocks or rental income from real estate, reinvest that income into more assets rather than cashing out. This exponentially boosts the growth of your portfolio, especially when compounded year after year. For example, if you reinvest 8% annual returns on a growing portfolio, your investment can more than double in a decade. This set it and forget it approach helps you benefit from long-term compounding. Step 7. Be tax smart. Taxes can eat into your returns, so it's critical to invest in a tax-efficient manner. Here are some strategies to minimize your tax burden. Maximize tax-advantaged accounts. Contribute to Roth IRAs, 400 and Onyx, HSAs, or similar accounts to reduce your taxable income or to benefit from tax-free growth. Choose low-fee funds. High fees erode your returns over time. Focus on low-cost index funds and ETFs, which typically have expense ratios under 0.2%. Tax-efficient withdrawal strategy. When you start withdrawing funds in retirement, consider tax-efficient withdrawal strategies, such as tapping tax-deferred accounts first and taking advantage of long-term capital gains rates for stocks held for over a year. Consult with a tax advisor to ensure that you're maximizing your investment efficiency. Step 8. Stay disciplined and review regularly. Building a $1 million portfolio takes time and perseverance. It's essential to stay disciplined throughout the process and avoid making emotional decisions based on short-term market fluctuations. Revisit your portfolio at least once a year to assess its performance and make necessary adjustments. Rebalancing your portfolio ensures that it remains aligned with your goals, risk tolerance, and the market's changing conditions. Additionally, stay informed about changes in tax laws, investment trends, and economic shifts. This will allow you to adapt and make the best decisions to keep your financial plan on track. Keep your eyes on the prize. Achieving a $1 million portfolio by 2030 is an ambitious but achievable goal. By focusing on disciplined saving, investing strategically, automating your contributions, and minimizing taxes, you can build a substantial nest egg over time. Patience and consistency will be your allies as you navigate the road to wealth. Let me know in the comments section below. What do you think of our video? If you enjoyed this video, make sure to hit that like button. Also, subscribe to our channel before you go. Thank you for watching.